It's October 9th, and this is, of course, the video log takes 30,000 to a million. It is after market here on Friday. And after I take you through the account real quick, what I want to talk about today is Hercules Capital, which is basically a holding company and a lending company that lends out money to startups in Silicon Valley and other tech companies that are even a little bit more matured. So I'm going to take a look, I'm going to go through that and tell you my opinion of the company, and we're going to look a little bit at their financial statements and their quarterly statement, and I'll show you what they're all about, and maybe you'd like to invest in it or not, short it, I don't know. I have a fair substantial amount of it. I think like maybe 2.7% of my account is Hercules Capital at the moment. So I'll talk a little bit about that. But first, before this, as always, I'm going to take you through the account and show you what happened today. It was a pretty good day. And the last 2 days have been pretty nice because, of course, the stimulus talks resumed, and it's all about pumping money into the markets, right? So here is the account I'm sitting at. Why is it always like this? Why? Okay, that's better. Strange. All right. So here's the account. I'm sitting at 121,865, and the positions here on the right, you can see. Let's see if this is fixed. Oh, I see what's going on here. I see. All right, we're good now. So as I scroll down here, you're gonna see my options positions. A few of them actually expired today. Worthless. I wasn't forced to buy any new positions, so that means I just collected the premium. I have this is the ticker of the position, the strike price, whether it's a put or a call, the expiration date of the option, whether it's a buy or a sell, and the number of options right here. And this on the right here is the daily change. So I'm gonna quickly scroll through them. You can pause the video at any moment to try to figure out the full position, but I don't want to spend much time talking about each one. So here they are. Apple had a nice day today. I'm up a grand, almost $1,500, above $1,500 worth of valuation gain here. One thing that did really well today is the precious metals. Actually, silver and gold did well, and the stocks associated with them also did very well. As some of you may know, I have a whole another account full of mining shares, so that's cool. Uranium did pretty much nothing, at least the stocks. And then, as you can see over here, my latest positions towards the bottom of the list, and I've tried to get a lot of oil companies like Schlumberger and Shell specifically because, I mean, it has a PE of like 5, which is a little bit insane. It's 5.3, and even though they're probably going to cut this 8.37% dividend, I think it's still a really good buy at the moment, personally. Okay, so that's about all my positions. Here are emerging market bonds, and Hercules Capital is actually one of my newest additions, but it accounts for 2.87% of my portfolio. So there we go, and that's what I'm going to talk about today. It's I have one call sold against the position at 12.5, which is probably not going to get hit, but we'll see. I'm already up 6.4% on this position, and it's doing well. I mean, I'm pretty happy with it. I may sell some more calls if it goes up a little bit, but this is a pretty well diversified, company. So I guess I'll just start talking about it. I mean, one of the reasons why I wanted to get into this company is I wanted to be more into tech, but I wanted like the conservative side of tech. And so the conservative side of tech is loaning to all these companies, and that have weird valuations, and even if the company doesn't necessarily in the end work out, you still get to collect the interest, and it's a pretty high interest that this company is charging, like sometimes like 9, 10, 11, even 12%. They're charging on the debt on these startups, And sometimes they're not startups. I mean, they're just private companies, but they're bleeding money, right? And you want to, the current model in tech right now is you bleed money for 5, 10 to 15 years, and then maybe after 20 years you make some money, and then the shareholders are happy. So instead of actually owning these companies, even though Hercules does own a lot of equity and warrants, but instead of owning him all the time, what you can do is just lend money to them at a high rate, and then you collect. It's kind of like not best of both worlds. I mean, you don't get huge upside, but what you do get is high interest on a future kind of based businesses. So I do want to look to the future, and I do want to have some kind of growth aspect here outside of Apple. But it's hard to get into some of these companies that just lose money. Just like I can't let myself do it. So that's why I chose to put some money into Hercules, because they're participating in the game and they'll probably manage the tech world a lot better than I can. I mean, I don't know anything about tech. I just have a couple of theses about Apple, but that's about it. So I wanted to get a little bit heavier into it. So I put another 3% of my account in Hercules. So that's the reason why I'm investing. And I'm going to tell you what they own now. I mean, they're about a $1.35 billion market cap company, and they own about $1.1 billion worth of assets, market value assets, or at least fairly valued assets. And they're collecting on most of that. They're collecting about 9 or 12%, which they're using to pay dividends to shareholders. But they do have a growth aspect because of the equity portion of their portfolio. So here's what Robinhood says about it. Okay, that's not what it says. This is what it says. Of course, I think I briefly mentioned this before, and you can see how many things they're actually invested in. But if you don't want to read through all that, basically they have a very large position in biotech and medical devices, and I think maybe off the top of my head, probably around 70 to 90% of their investments are in some kind of healthcare technology type of instrument, and the rest of it is kind of communications and other types of software. So excuse me, so here we go. These are the basic stats here, which is, they have 77 employees, which is good. They don't have to pay a lot of salary on their management team. And from what I can tell, the difference between in their valuation, which is 1.38, and their assets, which is about 1.15 or something like that, that difference is what you pay for the value of the management team. So it would be useful for me to try to figure out how much these 77 people are getting paid, so I can try to figure out, like, what is the well, I know how much they're getting, I don't know how much they're getting paid, but I know what the market's valuing their skills at, which is about 0.2 billion, $200 million. That's what they're valuing them at. The dividend is 10.85, and honestly, I think that's fairly sustainable. Like, they might cut it, but they're dishing out all the money, all the interest that they receive from their debt onto shareholders, and it honestly doesn't leave a lot for reinvestment. So maybe they're kind of reached a point where it's not worth for them to grow anymore. Maybe they've designed this vehicle specifically to do that. I haven't looked at the exact history of how they got to this point, but that's the reality of the situation. So this is their quick numbers. Let's take a look at them actually on FinViz real quick, just to see if the numbers are, oops, what was it, HGTC. Okay, HTGC is the symbol. Well, yeah, okay, so PE of 13.5, forward PE of 8.99, so they're expecting the earnings to grow a little bit, and that could be true. I mean, some of these positions are probably going to grow. The valuation will probably improve of this company a little bit over time. Now, none of the margins are listed here, which is fine. Dividend 10.63. Even the payout ratio is not listed. 77 employees, which matches up. So I guess from these two sources, though, the numbers are pretty accurate. What else can I learn here? Institutionally owned, 32%. Insider ownership is 2.69%, which is fairly large, which is a good sign. I mean, I like the insiders to own the company because they have some skin in the game, right? They want to make sure that they're doing well by the company because their personal assets are invested in it. Sometimes CEOs will just chase the paycheck without actually caring too much for the company. Short flow is 1.28%. It's average. Well, I can't really learn much from here except what you can see on Robinhood. But one thing that I have been reviewing is their quarterly statement. So we're going to go into it, and all these companies that they own, the only ones that I really recognize are things like Impossible Foods and the creators of the Impossible Burger. And also they have some equity in DoorDash, Fastly, which is a new public company that just IPO'd, I think, Lyft, and OfferUp. And these are the companies that I've heard of. Literally all of the other companies that they own and all of this other debt that they have, secured debt, I don't know. I've never heard of any of these companies. Can you see them? Let me see. Yeah, you can see. So, I mean, I scroll through them and their positions are absolutely enormous. I mean, their portfolio is gigantic when it comes to the amount of positions they have. So they basically own like Silicon Valley startups. It seems that most of these companies that are operating here, they're just getting their funding from Hercules Capital. I mean, which is good because overall, they're probably going to go up as a group. And you can see over here it says the sub-industry that they're in, medical device equipment, software, surgical devices, sustainable renewable technology, communications, drug delivery, but most of it is in drug research, okay, like drug discovery. So you'll see here, there we go. Most of these companies have this description in them here, drug discovery and development. And I think about, maybe 80-90%, as I mentioned, of their accounts, of their portfolio consists of medically related companies. And it's very interesting that I haven't heard of virtually any of them, but again, I don't know much about the medical field. Oh, I guess Proterra I've heard of, but that's about it. So they own a lot of common stock, they own equity of all sorts, they own secured debt, and they own a lot of warrants. You can see here they have warrants, which is basically just kind of a weird version of an option. Yeah, I mean, I don't recognize any of these names, which I guess is good. I mean, but I don't know how good this management team is. Let's see what they don't have a Morningstar review, so I can't even tell what Morningstar thinks about them. So I don't know about the management, but I imagine based on their performance thus far and based on what the portfolio looks like, I would say that they're pretty good at what they do. But that's just based on the moves that they've made, like just from their current portfolio. I don't really have any in-depth knowledge or personal knowledge of how good they are at what they're doing, but I feel pretty confident looking at this distribution. Feel pretty confident about investing in the company based on this. And I mean, their assets didn't grow too much between last year. Let me find out. Okay, this is kind of like their balance sheet here. So their total assets have only increased like $8 million or something like that between December 31st and June 30th, which is actually not bad. I mean, that's through the March drop, right? And and their liabilities have actually decreased a little bit by 24 million, it seems like. So overall, not too bad, but a very, very small change in their holdings in these 6 months. that are reported here. So overall, my big take is that if you want, which is what I want, is I want exposure to technology, but I don't want to take the risk of trying to pick winners myself, because I'm just going to end up picking them on popularity and what people are talking about, which is a bad way to, in my opinion, pick long-term positions. Maybe good for short trades, but not like long-term investments. So based on that, that's why I decided to go with Hercules Capital, and perhaps I'll grow the position. Perhaps maybe if it gets a little bit too rich, I'll sell, or I'll sell call options against it. But that's the company I want to cover today, and maybe you'll find your own reasons to invest in it. Maybe you want to short it. I don't know. It's up to you. Maybe you think that biotech is overpriced right now, and Silicon Valley is going to be going in a downfall for the next year or two or foreseeable future. So I invite you to make your own decisions, or you can just stay out of it altogether. That's the great thing about investing, is that you don't have to be in any company. You don't have to have an opinion on any particular company, right? Like, I don't have to participate in Tesla. I don't have to be a bull or a bear about it. Not required. It's fantastic. It's great. Let me know if you have some position in this company, or even if you've heard it. So if you heard it, type in the comment, yes, I've heard of the company. If not, then type that it's new to you. All right. And also let me know if you're making more money than I am. I always like to know. I hope you are. All right. Peace out.